Good morning. It's Friday, October 10th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So looking at some top headlines, then we'll get into the silver market. So the S&P 500 headed for a small weekly gain up 0.2%. The buy everything trade really rallies on. Bets against the U.S. dollar becoming the pain trade here as the greenback is set for its best week since November 2024. You've got the dollar index at a 99 handle. If you get the chart back, you can see it's attempting to break out to the upside. The S&P 500 futures and also the NASDAQ, they are flat, 67.80 on the S&P. That's up one, and the NASDAQ at 25,286. You do have gold futures popping back up about $41 here, trading at 4,014, recouping back above that 4,000 mark. So investors, they're really flocking into everything here from stocks, bonds, cryptocurrencies, commodities, really underscoring a resilient risk appetite. You look at the equity funds, they drew about $20 billion for the week ending of October 8th, and that's according to Bank of America here. So if you look at the silver market, you do have spot silver taking out and trading above that futures contract here. And it shows you that there's a very serious near-term and extremely near-term shortage here on specific exchanges. What you're seeing here, and what you want to do is you want to Google search backwardation versus contango if you want to understand some of the dynamics and some of the mechanics of the market, because you look at a market like the oil market, the farther out you go, the cheaper you get. So a lot of it has to deal with near-term supply and demand. And if you look at oil, you've got a growing surplus the farther out you go. That's why the cheaper it gets. As far as the silver market, there's just specific dynamics that are creating this right now. So silver has been setting a record-setting rally here this year, and it's taking out the gold market here. And there are a number of reasons for this further outperformance and expectations for further outperformance in the silver market. Now, we're not seeing it in the gold-silver ratio when it's sitting at about 82-1, but things could really get going in this silver market. So silver's up 66%, 2025. It's beating gold up 52% by a major margin here. It's the silver lease rates here, the 1 month lease rate, that really has the holders of silver and London vaults loaning their metal out here, and they're getting 35% return, indicating this deepening shortage. Now, the LME, that's always been a circus. They've got these goofy settlement procedures here where the CME is far superior than the LME. And yes, I have to indicate that I am an employee of the CME group. I'm a contracted employee with them where I put out content and data specifically for them. Now, if you get to the drivers of the silver market, silver's dual monetary and industrial role has really expanded the demand rapidly here, and China is really the center stage for the growth. So China's been buying all these industrial metals, and on top of that, they've been building their reserve stockpiles here in the gold market. They've only got about 8% of their FX in gold, and what you look at, most other central banks are closer to 20%. So there's anticipation that China is going to continue to ramp up these purchases here on any kind of significant correction to try and build those inventories here and divest themselves of other FX currencies that they are not interested in owning, specifically the US dollar and also treasuries. Now, shifting gears here, you look at China here, and sticking with that, you have soybean futures under some pressure here in the overnight session, down about 8 cents, trading at 10.14. Trump and Xi Jinping are positioning themselves ahead of this upcoming meeting. You got China, they announced new restrictions on exports of rare earths and other important materials, and will begin charging port fees here for ships that are owned by American companies and individuals, as well as those built in the US. Sticking with some of the metals here, you look at some upgrades. You got Newmont Mining raised to outperform. That's by CIBC with a price target of 112. And then your checklist on the markets. We went over the dollar index here, pulling back after a 3-4 day rally. 10-year treasury yields also just consolidating, but slightly higher at 4.10%. I'm sorry, 4.10%. Then you look at the VIX here futures, just popping up a bit here, not above that 20 level, that where you get that serious volatility, but just kind of turning up just a touch here. 1775 up 5 on the overnight session. You go over to the global markets, Europe and Asia. European stocks set for the third straight weekly gain here. Optimism around France to get control of its political crisis. It's been a circus. Forget the LME. Look at French politics here. That's been just wacky at best. You go to Asian stocks, are sliding. They're putting the regional benchmark here on track for a weekly loss. You You get Japanese equities here that are leading to declines. You got some concerns over the high valuations in the tech sector. The MSCI index falling about 0.8%, headed for the third drop in 4 sessions. We are expected to start getting some economic data here, but we probably won't see much of it. Maybe we'll get University of Michigan consumer sentiment that's due out at 9 a.m. Central Time. You also are going to have a couple Fed speakers coming out here, one at 9:45 and one at 1 p.m. here, but the only one I'd watch here is Goolsby. You go to what the markets are thinking about the government shutdown and the Fed interest rates, you're really looking past that October 15th. That's where it's a 94% chance that they settle this, but there's no clear date and no end in sight. October 13th to 15th is when those federal worker paychecks stop coming through. So things might get a little bit dicey. I'm supposed to travel to New York next week to do a couple in studio. I'll be on the floor of the NYSE, and then I'll also be in Yahoo Finance in their studio doing a couple different TV spots here on the precious metals and also on the commodity markets. So you get to the CME's Fed Watch Tool, 94.6% chance of a 25 basis point interest rate cut. You go to the poly market, it's a 91% chance. You go to the ETF flows here. So they were selling gold, they were really buying the dip in that silver, platinum, and palladium market. So exchange traded funds, it's been up for 10 straight sessions. They were naturally going to cut at some point in time. They sold some of that gold on that rally here. And what they did was they added about 621,000 troy ounces of silver holdings in the last trading session. And then you also got palladium. They increased that as well for the 9th straight day. Gold silver ratio about 82-1 here. So we're going to expect to see probably continued volatility. And something that I'm watching on a side note is the crude oil market starting to break and look like it could possibly on the front month break below that $60 mark here. So it's something else to watch. And also the dip buyers in the cryptocurrencies. So you guys got any questions, shoot an email to info@bluelinefutures.com. Remember that futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.